current level of the equity market, both in South Africa and overseas, as proxied by the S&P 500, is very, very high, at or around record levels. And I perceive a disconnect between the high levels of the market and the underlying fundamentals of the economy, which, let's be honest about it, are not very good. So trying to rationalize why that disconnect has come about is actually quite difficult. Although sometimes, it actually can be fairly straightforward if you scrape away the surface and look at really what's happening. I think as far as the S&P is concerned in the US, which recently hit new highs, some of the reasons are that we're getting an improvement in US manufacturing, unemployment is coming down gradually, jobs are being created, and we're also getting a resurgence, a renaissance, if you like, of the US oil industry. But I think even with all those positives coming in, the US economy is unlikely to move forward rapidly enough to justify the kind of high levels of the market there. As far as our market's concerned, I think a lot of the reason for the rarefied level is the fact that the rand has been very, very weak, coupled with the realization that most of our big cap stocks have got primary listings in London and elsewhere, and when you translate those share prices at the weaker rand, it gives a boost to the locally listed prices. So again, there's a big disconnect here. And that makes the job of an analyst and a portfolio manager actually quite difficult at this point in time. It means that it's difficult to really take a view on the market from a holistic perspective, and it means you have to do much more in the way of selective stock picking. Having said that, stock picking is difficult because many of the stocks into which you would like to invest are now looking very, very expensive indeed. And I'm thinking of stocks here like some of the retailers, ShopRite, Woolies, not so much Pick and Pay, but Mr. Price, this type of thing. They're sitting on very, very rarefied PEs, well in excess of 20. So what do? I think a lot of people are now looking at these for the very, very long term indeed. If you buy quality, hold on to it, get paid for holding on to it in terms of getting nice dividends, and don't sell, you're probably going to do very, very well by sticking to that kind of quality. So I think that's really the kind of situation we find ourselves in. I think just one addendum to this, there's a lot of euphoria at this point in time about the particularly high level of the S&P 500. If in fact you look at the S&P 500's current record level, you must realize that in fact they went through a very similar peak in the year 2000, 13 years ago. And if you track the S&P against the US inflation rate, or US CPI, you'll find that in real terms, the S&P currently is about 30% below where it was 13 years ago. So from a long-term perspective, one has not really done well out of investing in the US equity market. So I think putting all these things together, markets are high. Our market is definitely very, very high indeed. But I think if one does one's homework and buys quality stock and sticks with it, one will be rewarded in the longer term.